Now, I want to share something a little bit technical here, but it's something you need to be aware of. When you have like a massive hammer reversal bar like we have here, you see the close is within the body of the previous day candle. It's got a very long tail. The tail is, multiple times the size of the body. You've got all this space to the left. It's looking like it wants to be almost like a V-shaped valley, right? And this looks like it wants to be the bottom. Now, this becomes a very, very strong technical area. And this is an obvious place where buyers in the dollar yen will want to rally from. So just be aware of that this is likely to dictate price action. And even if you see sideways price action and price moves down to 148, the sort of technical power of that reversal bar is not going to be forgotten until that tail is taken out. So just to bear in mind, you see that's the strong reaction we've seen. Now, fundamentally, we've had reasons for yen strength residually, with the Bank of Japan constantly sort of hinting that it's going to be exiting negative interest rates, and markets now think it's going to be spring around the wage price talks that the Bank of Japan is going to exit its ultra loose monetary policy, and so the yen has sort of been really enjoying some couple of strong days of strength on that and taking out these technical lows from this sort of hammer reversal bar on the weekly chart, just added to some of that technical yen buying. Now we've seen a little bit of a relief and a little bit of a pullback in the dollar yen. So just to be aware that we could see, this level pushing prices firmly higher, and just watch for sellers on rallies from this sort of 149, 150 region. Now, eventually, we are expecting the Bank of Japan to start hiking interest rates. And so yen strength is the story that's expected to start building. Now, the problem with this narrative is that we've been here before, and I was trying to sell the dollar yen from around these regions with my stops just above the high, and then I bailed out just as I saw these tops being taken out here, and that hammer reversal bottom being broken. That was just the perfectly worst possible timing. But I'm not trying to say that. What I'm trying to say is that it's tricky to necessarily time this move from the Bank of Japan. They're quite slippery in terms of, when they are going to make a move, when they're not going to make a move. So just to be aware of that. So it means that if you do enter a dollar yen short on the diverging outlook between the Bank of Japan and the Federal Reserve, it makes sense, right? But just make sure there's a place where you've clearly defined and limited your risk. So you've got your stops in place, so if you're wrong, okay, if my stop gets hit, I'm out. And bearing in mind, there's been a few times this year, and it was from just Christmas last year when speculation started to build about the Bank of Japan exiting negative interest rates, right? So this is a quite a tricky story. But what I want to just show you is that this strong reversal bar, and also the other thing to note about these strong reversals bar technically is that when you get a break of this sort of, once this moves one length of this bar higher. So if you look at the length here, right? Once it moves 144 points higher, right? Then at that point, this nose becomes a support level in and of itself. So once you've got 144 points higher, right? Then if you see markets move back, and particularly from an intraday basis, you almost always get a bounce, and sometimes you'll get a complete reversal from that. So just keep that in mind. A little bit here. You see how price is extended, and then you're going to move down to the nose, and it pops up. Now, a little bit here, you get this reversal hammer bar, price moves, and it moves down to those and pops back up. So just use that as a reference point. And technically, this is an area where markets will want to base price on, and technicians will be, paying a lot of attention to this, because that reversal that we saw yesterday, we're kind of half expecting. That makes a lot of sense for that to be a continued decent support area. So just watch this.